Hello, everybody. Welcome to Tuesday. The S&P 500 was up a little bit more than 0.2% today. The market's been showing a lot of strength. It's really, been powerful days. And I saw a quote actually in the Bloomberg, some stats I thought very interesting. So far this year, the up days have averaged 0.66%. The down days have averaged 0.45%. That's what I've been kind of talking about was just even on some of these down days, we've had rallies at the end to kind of pick things up. There's a lot of buying. The ratio between the up and down days is 1.5. That's the best ratio we've had to the start of a year since 1995. So 95 is significant because that was the very beginning year of the best 5 years of the history of the stock market. From 95 to 2000 was the big dot-com bubble. So, here we have artificial intelligence, lots of parallels being drawn between, kind of what was thought about and how companies are responding, how the market's responding to those things that were similar. And I see the same things also. It's with 95, it was the bigger companies providing the infrastructure for the internet that were really running. And again, by the end, it was kind of the crazy stuff for companies that didn't have products or revenues even, but just were a dot-com company that wanted to go public into that mania. So you can make money in these type of bubbles if they do happen. You just have to be very cautious about understanding that it probably ends and ends poorly, at least for some of these companies that have now disappeared. Stay kind of even keeled through these things. But the beginning of it would be companies like NVIDIA and such that would be running and what have you. And so I think this is a very interesting time frame. We're getting some of the same images and numbers and percentages that are coming up with same patterns. So, combine that with the pent up demand, could be kind of fascinating, but I'm definitely seeing strength in the market. We had the Federal Reserve governors couple come out today, doing interviews talking about, pleased with the progress on inflation. Still like to see more, before they're willing to really make cuts, both, either directly or indirectly insinuating that, the second half of the year would probably be when that would happen. That's been a pretty consistent message. And again, the market is still expecting, possible rate cut in May and what have you. It might not happen either, but altogether, I think that there's other things going on now that are more interesting to the market than what the Federal Reserve's doing. I do think that, the Fed cutting rates would help and it would make the market move, especially if they're cutting rates for, a good-ish reason and not because the economy's falling apart or something. And so that part is, there. It's still important, but I think you're going to see a lot more attention paid to kind of, the AI side of the story, and kind of what's happening there. So let's keep our eyes open, see what happens. Not a bad day today. Didn't quite make back what we lost yesterday, but nice to see an update. So look forward to seeing what's going to happen tomorrow. Thank you very much.